Happy Monday, everybody. Happy April the 27th. I hope you guys have had a great week. And you may notice that I have a friend here with me, Geoff Smith with Assurance Mortgage. Welcome.
Thank you for having me. Always blessed and honored for the relationship, everybody. Hope everybody's off to a great start to this buying season.
So I wanted Geoff to come in and have a quick chat because I know we've got agents who are brand new as well as seasoned agents. And sometimes it's easy for us to assume that everybody knows everything about every loan, which is really just not the case, huh?
They don't?
Nope.
Okay.
Shocker,
all right.
but no.
All right. I'm here to help.
Okay, perfect. So what I thought we would do is just have a chat about different types of loans and who they might be best suited for.
Okay.
So we could just roll through them one by one if that works for you.
Absolutely.
Okay, so let's talk about FHA.
Okay.
Can you tell me who FHA is best suited for?
So FHA, it's a great loan because it has more relaxed restrictions, right? So FHA is going to be more, the interest rates on FHA are not very sensitive to your credit score. So let's just say you have a buyer with a low credit score. The interest rate is not going to move very much as it would on, say, a Fannie Mae or Freddie Mac conventional loan. Let's just say in some cases they offer lower down payments. So 3.5 is the minimum down payment that's required for an FHA loan. For conventional, for example, if you're not a first-time home buyer, it's 5%. FHA also will allow you to make less money and buy more house. So if you've got a borrower whose DTI, debt to income ratio, is tight, and maybe they don't qualify for conventional, they might qualify with an FHA loan. So this might be a borrower with a lower credit score. This might be good for a borrower whose debt to income ratio is starting to get kind of high. It might be a borrower who needs to put less money down.
Okay, so let's talk about conventional. I know you just mentioned it when we were talking about FHA. Who is conventional best suited for?
So conventional is going to be your buyers that typically good credit, typically are making good money, and typically have money to put down. So in the grand scheme of things, if you're suited for a conventional loan, it's the loan that you want, and unless you're a veteran. And if you're buying under $832,000. So $832,700 is the maximum conforming loan limit. So that's as high as conventional loan will go.
Okay. What about down payment?
So down payments, if you're a first-time home buyer, you can go down to 3%. And it's weird when you assume people know everything. I can't tell you the amount of times where a first-time home buyer has come to me and said, we're almost there, but we're not ready to buy. And I'm like, well, what's stopping you? And they say, well, we don't have our 20% down payment yet. Mm-hmm. And I say, oh, well, you don't have to have 20%. And it's a shock to them. And you start talking about mortgage insurance, PMI or monthly mortgage insurance. So with a conventional loan, if you put less than 20% down, as most of you know, you're going to have to pay a monthly mortgage insurance. Mortgage insurance rates have really come in line for conventional loans over the last 5 years. So they used to be real expensive. Right now, if you have good credit, if you have very good credit, it's really not going to be that painful at all, to the point where most people who are scared of it, when I show them the numbers, if they have good credit, they go, oh, well, that's no big deal. And the beautiful thing about conventional loans is once your principal balance drops to 78% of the original purchase price, then it immediately just goes away. So with an FHA loan, that's not the case. You pay that mortgage insurance and it's there for life. So usually when I put someone in an FHA loan, we're going to say, hey, let's fix whatever's causing us to do FHA, and then in 2 or 3 years, let's convert it into a conventional loan and get rid of the mortgage insurance, hopefully.
Perfect. Okay, so you mentioned the service person quickly. Mm-hmm. What about the VA loan?
Best loan on the planet. USDA loan's up there, but VA loans are awesome. And I love helping our veterans. They've earned this loan by signing a piece of paper that says they've agreed to risk their lives for our country. Best interest rates, VA loans. You can put zero money down and there's no mortgage insurance. There is what's called a funding fee. So all of these entities, I'm just going to say this real quick, FHA, VA, they all exist to take risk off of our shoulders. So what they say is, hey, banks, if you underwrite this loan according to our guidelines, we're going to pay you back if they default on the loan. So they have to collect money somehow so that they can pay us back. And that's what really the mortgage insurance is, and the funding fee for the VA. And so the VA, what makes it great, the qualifications, the debt to income ratios can be very, very high. It's easy to get qualified for. It's gotten a bad rap in the years for being a difficult loan. I don't see any real difficulties with it. My appraisals on a VA are coming back in like 8 days. So that is a difference between VA and the other loans that are out, the other programs. We have 4 appraisers on rotation that can all do conventional FHA and USDA, but VA, they have to use their own appraisers. And it's a system where we just dial it up, put it in the system, and then we just cross our fingers and wait until the appraisal comes in. So it kind of, as a control freak on my loan, I don't like doing that. But they've been coming back in about 8 days, and if I just let my normal appraisals go, they're about 7. So the appraisal, which has gotten a bad rap, is coming in on time, and it's coming in at value. I haven't had a lot of VA appraisals that have not come in at value.
I have never had an issue with VA loans, and I don't really know why people don't like them so much, because it's a great program.
I could get on a soapbox and speak for about an hour about it, and I did for about a year and a half, and because people were not accepting VA loan, and it's not right.
Right.
You know, it's a veteran. They should go to the top of the list, not the bottom, in my opinion, as coming from a family of veterans. But at any rate, it's the best loan. I'm getting off my soapbox.
America.
Yeah, America. It's the best loan going, and if somebody if you have a service member, send them my way, and we'll definitely. I would love to put them in that awesome loan.
Okay, and then USDA. So let's talk about what USDA is, because they're not very common, and who they're best suited for.
So USDA is it's a great loan as well. Many similar characteristics. You can put 100% financing. You can put zero money down on a USDA. And if the appraisal is high enough, you could also fold some of your closing costs into the loan. So we'll actually loan you more than the purchase price. Now it is very geographic specific. It's a loan that is supposed to promote home buying, home ownership in the rural areas of our country. So right up here where we are in almost North Forsyth is kind of where that line starts. There's a map. You can find it by looking it up online. If you're ever out and you're wondering if somebody qualifies, just send me the address. A lot of you do, and I'll very quickly let you know if it's USDA qualified. But the other thing with the USDA loan, there's 2 things where people get hung up on it, and it does have an income limit. So you can make too much money and you won't qualify for an FHA. So it is for our lower income rural
What's that cap?
buyers.
Do you know off the top of your head?
I do not know off the top of my head, but it is something like 125%, I think, of the area median income.
Okay.
I believe that's what it is.
Okay, so all that's going to change based on where it is.
It can change every year, and it can change where it is.
Okay.
And so when somebody sends me a client, we're going to look at, I'll type in the address in their site, and it'll tell me. They also do have a map. And then the income, I'll put in what the income is, and it'll in the address, and it'll tell me if they're qualified.
So any other loans we should know about?
Well, so those are the main ones. Other than that, you've got your niche loans. So we've got jumbo loans, which everybody knows, and that's anything that's over that $832,000 mark. And so, which makes these other loans more, really, I'll say more expensive because they are, is that with the other loans, with the Fannie Mae, the Freddie Mac, the FHA, the VA, we can sell those loans on the market. Because they're a stamped commodity, we can buy and sell them, and they're guaranteed. So there's a lot less risk. When we're doing the other loans, jumbo loans and other niche products, we can't sell them, and so therefore the interest rates, the qualifications are a little bit harder, but not too far off, especially with the jumbo. So jumbo are just investor loans over $832,000. We've got other niche products where we have bank statement loans. So there's a lot of niche products where loans that are still good loans, they just don't fit into the box of Fannie Mae, Freddie Mac, FHA, or VA, or USDA. But a bank still wants to do those loans. We've got a bank statement loan where Fannie and Freddie and all those other government loans, they say, hey, you have to look at your tax returns on a small business owner to determine income. Well, not everybody's tax returns show the true profit and loss of a business. That might shock somebody like you, Trish. But we have a product where we can look at your bank statements over the last 12 months, and we'll determine what your profit and loss is. And that's been the difference. We have a down payment assistance program called Chinoa. It's actually in cooperation with FHA, where we can loan them the full down payment. So if they don't have a lot of money for a down payment, we can loan them that. It's not a fantastic loan, but if it's for the person who that's their only thing holding them between owning a house, it's a great loan. We've got some construction loans out there. So if somebody's looking to buy land and build on it, we can do that. We can also use that for renovation. If you've got a client that has a house that doesn't check all the boxes, but everything else is almost perfect, we can give them enough money to buy the house and to do the renovations.
Okay.
It wouldn't be me if I didn't talk about our bridge loan.
I was going to ask you, but go ahead.
Okay, it is. Every time I say it's in demand. I'm really just a communicate. I don't have to sell it. I just have to communicate that we have it. And there's other banks out there saying they got a bridge loan, but they don't have our bridge loan. We are the only game in town on this, and that's why I'm so proud of it, and I'm closed so many of them. So literally, if you have a client that is on the fence, they're not sure, like, I'm so nervous about selling my house. I don't know if it's going to sell in this market in time for me to buy the new house. And so they get stymied, they get that paralysis, and they're letting these great houses go by and go off the market that they really wanted to live in because they're nervous about selling the house. Our bridge loan does two things. Number one, we're gonna pay off their current mortgage, and we're gonna give them cash to put down on the new house. So we're gonna access that equity, and we're gonna get them that down payment money. And I've even used that for people who were planning on keeping their house and just pulling money out of the markets. And I say, you don't have to pull money out of the markets. Leave it in the markets, and we'll use the bridge loan. So I've done that for people. So number one, it gets them equity in their house. But number two, when we do a loan, if I've got two mortgages, if they want to sell their house after they buy their new house, I've got to calculate two mortgages against their debt to income ratio. Well, in the bridge loan, there's no monthly payment. So we pay off their current mortgage, and there's no mortgage payment. So we don't have to qualify them with that mortgage payment. So it's really, really a great loan. The price to do it is relatively small. It's about $3,000 in total closing costs. The interest rate's kind of high. It's more like a home equity line rate. It's over 8%, but it's a short-term loan, and as soon as it gets sold, it gets paid off. And one of the best parts that y'all need to hear is we require them to sell it within 6 months. So there's pressure there on them to lower that price when you're telling them you need to lower the price, it's not selling.
It helps.
There's some pressure there. So it's a really, really great product. And I can say without a doubt, it has been the difference between a lot of people not buying versus getting out in that market and buying. So if you know anybody.
And 6 months is a long time, guys. So if you've got somebody that you need help moving them, definitely give Geoff a call, and I will have his number here on the screen that you can reach out and connect and learn more.
Please.
Yeah,
please call me. I'm here. I'm just waiting. That's all we do all day is wait for y'all to call.
So I think he's doing more than that in a day, but okay.
We're keeping busy, but we love our relationship with Maximum One, and we have thank you all the agents that are out there that we're currently working with. Thank you so much for your business. With every deal we get from you, we feel like we've got to earn the next one by doing a good job on that one. So I feel like I'm wrapping up. I don't know if it's time to wrap up.
We can wrap up. Yeah.
Yeah.
Just know that Geoff is one of our great alliance partners, and he has supported Maximum One through and through. So please give him a call and reach out to him if you've got a buyer client who needs a great lender. So thanks for being here today.
Thank you for having me. I appreciate it. Thank you all very much.
Have a great week.